Last month, we have the biggest IPO in history, SpaceX. $85 billion, everyone went crazy. But 3 days ago, the second biggest US listing in history happened, and almost nobody noticed. A company that just raised $26.5 billion, a company that controls the biggest bottleneck in artificial intelligence. The stock is up more than 2,040% this year, and now, for the first time ever, you can buy it in the US. By the end of this video, you will know why this may be the most important AI listing of 2026 and the 3 risks that could kill the whole idea. Let's go. First, some quick context because this connects to something bigger. SpaceX went public on June 12. It raised at 85.7 billion. The stock jumped the past $2,000, and today it trades below its opening price. The people who bought the hype are losing money. Remember this chart because what I am about to show you is the opposite story, a company where the results came before the hype. One quick note, I am not financial advisor and this is not financial advice. I am investor sharing my research, and at the end, I will tell you exactly where I could be wrong. Here's what most people get wrong about AI investment in 2026. For 2 years, the story was simple. Buy Nvidia because GPUs are the bottleneck, and that worked. But bottlenecks move. Today, the real limit in AI is not the processor anymore. It's the memory that feeds it. Think of it like this. An AI chip without fast memory is a Formula 1 engine with a garden hose as a full line. The engine's power doesn't matter if the fuel can arrive fast enough. Now, here's the number that should stop you cool. Memory prices didn't go up 10 or 20% this year. DRAM contract prices almost doubled in 1 quarter, up 93 to 98% in Q1, and then they went up another 60% in Q2. That has never happened before in this industry. The company is SK Hynix from South Korea, and if you have never heard of it, that is exactly the point. The opportunity. That is the opportunity. Number one, it controls about 85% of the global HBM market. Samsung and Micron have about 21% each. Number two, it is Nvidia's main memory supplier. The memory upside, Nvidia AI chip is more likely SK Hynix. Number three, profits jumped 5 times in 1 year. Revenue grows 198%, and its memory is sold out for the next 3 years. Look at this chart. This is not a competitive market. It's almost a monopoly on the most limited component in all of AI. 85% in the one product that matters most. Until last week, to buy this company, you need a Korean brokerage account, almost impossible for most of us. That changed on July 10 when SK Hynix listed on the Nasdaq, ticker SKHYV, rising $26.5 billion, the second largest US listing ever, behind only SpaceX. And on a day one, it jumped almost 30% from $149 to $168. So right now, for the first time, anyone can buy this stock with one click. And I am watching this from Argentina, where I learned the hard way that access to real assets matters more than opinions about them. Now, memory has always been a boom and bust business. So why this time be different? 3 reasons. Please judge me them with skepticism because this time is different are the 4 most expensive words in investment. 1. Discipline. SK's own chairman said global memory supply will stay about 20% below demand until 2030. 2. Visibility. Micron's HBM is sold out through 2027. Big Tech is signing contracts into 2028 that turns a casino into a subscription business. 3. New demand. Micron just signed a memory deal with General Motors. Cars, robots, edge AI, a second wave of demand on top of data centers. Put it all together and the numbers look crazy. Samsung expects its quarterly profit to jump about 18 times year over year. Micron data center margin hit 87%, and the whole memory market almost $900 billion this year and over 1.2 trillion next year. So the big questions, the 1,000 of people are good line right now. Is SK Hynix or Micron? Micron is the proven US option, up around 8x in 1 year, diversified, and it looks cheap on earning, which sounds strange for a company growing this fast, but the market never trusts the top of a cycle. Hynix is the pure HBM king, the biggest share in the product that matters most, and it always trades at a discount simply because US investors couldn't buy it. The bull case is simple. No, now that is on the Nasdaq, that discount should close. The bear case is the same for both. If big tech slows its spending, or if the $590 billion Korea is investing in new factories arrive too fast, this sector goes back to what it always been, a brutal cycle. Hynix already fell 17% in early July. This is not a calm ride. And there is a third option almost nobody mentioned. The round-held memory ETF, ticker DRAM, Micron, Hynix, Samsung, SanDisk, and Kioxia, all in one ticket for about $60. If you believe in the supercycle but don't want a single stock risk, that's the safer route. Now, here is the part you will not find on CNBC, and it's why this channel exists. The same day Hynix arrived on the Nasdaq, X stocks launched a tokenizing SK Hynix on Solana, EFM, and TON. Tokenized stocks are blockchain tokens backed one-to-one by real shares. They trade 24/7 from almost anywhere, starting at $1. I've been using them for months, not for fun, but because I can access US markets the normal way. And look at the price. The token trades at the same price as the Nasdaq stock, same asset, different rail. So this trade now exists at three levels: the Nasdaq stock, the ETF, and the tokenized version for the billions of people that the system left out. I am one of them. I am making a full video about this. So subscribe if you want. I promise you three risks. Here they are. And if you are thinking about buying, this matter more than everything else I said. Risk 1: too much supply. Every memory crisis in history started like this. Record spending at the top of the cycle. Korea just commitment more than $500 billion. Risk 2: you are buying after the move. SK Hynix is up 2,040%. Micron is up 8x. The question is not, is this a great business? It is how much of the future is already in the price. Risk 3, the mechanics. The listing create 70.8 million new shares, and one other is only 1/10 of a share. Know exactly what you are buying. So my own stakes. The supply is real. The contracts, the margins, the 58% share, those are facts. But your enterprise decides your result. Buying great companies at crazy prices is how people lose money in bull markets. Buying in steps, a small position now, adding more on the dips, bits going all in during IPO euphoria. That is not advice. That is how I think about risk. Know what you can lose before you dream about you can win. So that's the $26 million listing nobody is talking about. Next video, the full story of when crypto exchange promises tokenized SpaceX shares and then had to refund more than $1 billion. I watched it happen in real time. If you want to see more finance is going before Wall Street sells it back to you, subscribe. New video every 2 weeks, deep research, not high. And comment below, SK Hynix, Micron, or the ETF. Which one you buy and why? I read everything. See you in the next one.